Hello everyone. Welcome to our weekly lecture. Today we are in week 6 and I'm going to cover the topic of consolidated financial statements, which include a single subsidiary and an associate. This topic is mainly building on your previous knowledge of the preparation of consolidated financial statements, which include only a single subsidiary. So we are moving forward by introducing a new type of investment, which is an associate. So the presentation that we are having today include learning objectives, so which means the main learning outcomes that we need to achieve by the end of today's lecture, and then outlining the course from week 1 up to week 6. And then we'll start to introduce the associate, starting with the definition, and then we'll move to the accounting treatment in consolidated accounts. And then we'll use a practical example to explain how to prepare consolidated financial statements, which include an associate and a subsidiary. And then we finally move to the preparation for the workshop this week, which include reading, and the background reading, and also the exercises that you need to solve before coming to the workshop. The main learning objectives that we are covering today include two main objectives. The first one is about how to prepare a consolidated statement of financial position, which include a single subsidiary and an associate. And then we'll move to the second learning objectives, which include the preparation of consolidated statement of profit or loss, including an associate and also a single subsidiary. So looking at what we covered so far, so we're starting in week 1 by looking at an overview of financial statements of a single company, and this is mainly the main financial statements and the accounting treatment of different items in financial statements, which include a statement of financial position and a statement of comprehensive income. And in this week, we mainly try to link the knowledge that you acquire at level 5 with the expectation for level 6. And then we started with the explaining the principles of consolidated accounts, which include the definition of groups and also the different definition about parent company, subsidiary, and how the parent company control the subsidiary. And then we'll move to how to prepare a consolidated statement of financial position, and this is mainly has different parts. The first part and the second part, which is mainly covering different issues related to the preparation of consolidated statement of financial position, including fair value adjustment, intra-group trading, and intra-group transactions. And also we cover in week 5 the consolidated statement of profit or loss and comprehensive examples, which include the preparation of both consolidated statement of financial position and consolidated statement of profit and loss. From here, we start to move to our next subject, and our next subject is preparing consolidated financial statements, which include the associates as well as the subsidiaries. Starting with the definition of an associate. The associate is mainly defined in this standard as an entity over which the investor has significant influence. And this mainly differs from the definition of the subsidiary. So the subsidiary is mainly about control, but associate is about significant influence. The control concept is mainly give the right and obligation to direct the policy of the subsidiary. On the other hand, significant influence is giving the power of the investor to participate in the financial and operating decision of the investee. Okay, so and this is mainly slightly less influential than the control. Okay, so it is not control, it is neither control nor joint control. So control in the case of subsidiary and joint control in the case of joint venture. And there are some indications of the power to participate. Okay, so it may include representation on board of director or material transactions between the investor and the investee, and interchange of management personnel, especially top management, provision of essential technical information. So if there is provision, technical information are provided by the investor or the investee, this is mainly give them the power to direct or participate in the financial and operating policy of the investee. And there is some indications about assuming the existence of significant influence when the investor hold 20 to 50% of the voting shares of the investee. Moving to the accounting treatment. Okay, the main method in an accounting that we use to account for subsidiary in consolidated financial statements is mainly known as the equity method. Okay, and the equity method is a method of accounting whereby the investment is initially recorded at cost and adjusted thereafter for the post-acquisition change in the investor share of net assets of the associate, and also it take into account the investor share of the profit of the associate when we come to the statement of profit or loss. Equity method must be used unless the associate is merely held for sale. Okay, if the associate is merely held for sale, in this case, the investment in associate will be classified as held for sale according to International Financial Reporting Standards number 5, and it will not be included as associate. Another exception is mainly when the parent company is exempted from preparing consolidated accounts, and this case when the parent company itself a wholly or partially owned subsidiary of another company, and this mainly according to International Financial Reporting Standard number 10. Now we'll start applying the equity method in the preparation of consolidated statement of financial position. Starting with subsidiary. Subsidiary, we already know about it in the previous weeks. So the rule here for the subsidiary, all assets and liability are consolidated on a line-by-line basis, which mainly called for full consolidation. Moving now to the associate, and the associate here, according to the equity method, will be classified under non-current assets. So they are initially recorded at cost, the cost of investment, and then will be adjusted in following years by adding the investor share of post-acquisition changes or post-acquisition profit. The steps here for the associate start with having the statement of financial position of both the parent company and the associate, And when we apply the equity method, in this case, what we need is to pick up two figures in the statement of financial position of the parent company, which is the investment in associate at cost and the retained earning of the parent company, and adjust both figures by the investor share of post acquisition profit of the associate. Okay, and this may be called one line consolidation. One line consolidation because we only we don't need to go through all the detailed item of the assets, liability, and equity of the associate and the parent company. We just picking up the investment in the associate at cost and the retained earning of the parent company, and adjust both figure with the investor share of post acquisition profit of the associate. And then we produce the final format of the consolidated statement of financial position, which include only adjusting the investment in the associate and also the retained earning of the parent company with the investor share of post acquisition profit of the associate. Okay, so looking at the example, so we have in the example three companies. The three companies here are the parent company B, the subsidiary S, and the associate A. And we have several items here related to the statement of financial position of the three entities. And then we have additional information. And this mainly is a solution to the this example 1 about consolidated statement of financial position, which include a single subsidiary and associate. Okay, continue with the use of equity method. So we'll move now to the use of equity method in the preparation of consolidated statement of profit or loss. Okay, so for the subsidiary, the rules here is all revenue and expenses are consolidated on a line-by-line basis. Moving to the associate. So the associate, if we have investment in associate, so it will be the accounting treatment according to the equity method is a single line after profit from operations, and this single line will include the investor share of the associate profit after tax. So this mainly the accounting treatment of the associate. It is one line consolidation. So one line consolidation, it is only we include the investor share of the associate profit after the tax. So this mainly a summary here. So if we have the parent and the associate, so what we need to do is if there is investment received from the associate, this investment income need to be excluded, and then will be replaced by the investor share of the associate profit. Okay, so we are now ready for example. So it is example number 2, and this example we have the statement of profit or loss for three companies, B, S, and A. B is the parent company, S is the subsidiary, and A is the associate. And for the three company, we have several items in the statement of profit or loss. We have revenue, operating expenses, finance costs, income tax expense, and then the profit for the year. And we have additional information. So this is mainly the numerical example that is mainly covering the consolidated statement of profit or loss. We're moving now to the preparation for the workshop. So what you need to prepare to get the workshop for this topic. So we have two types of preparations. The first one is about reading. So we have several sources of reading. So we have accounting standards. So we have International Financial Reporting Standard number 10, which is about consolidated financial statement, and International Accounting Standard 28, which is investment in associate and joint venture, and International Financial Reporting Standard number 3, which is business combination. So this mainly the main standards that you need to mainly read as preparation for the workshop. And also we have different sources of textbooks. So we have a professional textbook, which is mainly ACCA. You need to mainly read chapters 16 to 19, or you can use also academic textbook like Eliot and Eliot and Alexander and others. And for this textbooks, so you have also different chapters, so you can mainly visit more than one source to mainly prepare for the workshop. Then we move to some exercises. Okay, so you can use different type of exercise here. I have prepared some exercises on Google Docs, and this mainly to test your knowledge of subsidiary and also some of the principles that we cover for associate. At the same time, you can also visit the publisher textbook, which is mainly McGraw-Hill Connect, and this also include plenty of online questions. So and thank you very much. See you in the workshop.